Bitcoin, the king of crypto, has fallen more than 50% over the past 6 months, from its high around 126,000 all the way down to a low around 60,000. And it's got a lot of people asking the question, is it over? Is this it for Bitcoin? Is crypto done? Or is this actually a smart buying opportunity? Well, that's exactly what I'm going to break down for you today. I'm Deron Wagner, and I run Morpheus Trading Group, and I've been reading charts and trading the markets for over 20 years. Now, this is not financial advice. In fact, honestly, it's not even my opinion. This is simply what the charts are telling us. So let's see what the charts say. First of all, let's talk about that 50% drop. Now, if the S&P 500 in the stock market dropped 50%, that would be a full-blown crisis. But in crypto, a 50% pullback is a normal part of the cycle. In fact, if we go back to 2022, you'll notice that Bitcoin was at a high of around 69,000 and plunged all the way down to about 15,500. That's more than a 75% correction. And a lot of people back then were calling crypto dead. I heard the same things. But then, just a year later, Bitcoin had already rallied all the way back up to its prior all-time high, and that kicked off the 2024 and 25 rally, where Bitcoin exploded to 126,000. So as you can see, it's not the first time that Bitcoin has had a correction of more than 50%, and this is crypto. Big corrections in crypto are not the end of the story. In fact, they're usually where the next opportunity begins in the cycle. Now, right now, Bitcoin is sitting right around the $70,000 mark. And there's three separate technical factors that are all lining up in the same exact zone. So let me show you each one. First, we have a 50% Fibonacci retracement. Let's take a look at that. Fibonacci retracements measure how far a price has pulled back relative to its prior move. And the 50% level is the halfway mark. That's this blue line here, the 50% mark. And this is one of the most watched levels in technical analysis. In fact, big money, the institutions, they pay attention here when prices pull back 50%. And by the way, if you want to learn more about how the Fibonacci tool works and how we use it in our trading, we just published a video from one of our live meetups breaking it all down. So I'll drop a link for you below in the comments. So this is our first support factor right around the 70,000 mark, which is that 50% Fibonacci retracement level. Next, we have horizontal price support. Take a look here at the 69,000 all the way up to the 74,000 area is a zone of support. This is support that's formed from prior highs. Notice back in 2021, that acted as a ceiling right around the 69,000 mark. And again, about a year later, that acted as a ceiling and acted firmly as resistance there for more than 6 months. And eventually the price broke out and above that level. And when the price broke out above that level, that's called a role reversal, because now this prior level of resistance now becomes support. And take a look, that's what happened when we had the first pullback. Notice how we pulled back right to that 74,000 mark, right? And then we had another rally up to new highs and pulled back into the current correction. Now, currently we did undercut below that retracement level, below that horizontal support level rather. But notice how right now that the price is lining up right at that same support zone of the 50% Fibonacci retracement. And that's not a coincidence. So we've got horizontal support in the 69,000 to the 74,000 range, which is right in the range of that 50% Fibonacci retracement. And the third level of support, and this is a big one, is long-term support of the uptrend line that started with the lows of 2022. Take a look at this. Notice how last month, when we dipped down to those lows, we undercut the 50% level and we found support right at the uptrend line, right? Which started with the lows right around the 15,000 mark back in late 2022. So we've got this uptrend line here, and this is really key because this is our line in the sand, right off the trend line. As long as we hold above this line, the long-term uptrend is intact. So there we have it, three different support levels, the 50% Fibonacci retracement, we have the horizontal price support, and we have the long-term uptrend line. All three of those levels are converging in the same area. And when we have this happening, when we've got three different support levels converging in the same area, it's called a zone of confluence. And this confluence is really important because the more levels that converge at the same area, the more significant, the more powerful that support becomes. And right now we've got three major support levels, so it doesn't get much better than that. And here's the important part. Notice last month's low did actually undercut that 50% retracement, and it wicked all the way down to 60,000. But notice how the buyers aggressively stepped in right at that support level of the uptrend line. We had rejection. There was no more selling pressure. So that tells us it's a key level that institutions are interested in. And a really key point here is notice we didn't try to buy as the price was still falling. We didn't try to guess where the bottom is or try to catch a falling knife. Instead, we waited for the price to find support and prove itself by forming higher highs and higher lows on the daily chart, and also to get the confirmation of the volume exhaustion. So that's really important because when you're trying to catch a falling knife, you have much higher odds of getting stopped out. But if we wait for the price to actually prove that there's some buyers stepping in, we do pay a higher price on the entry, but that's in return for a higher probability of the trade working in our favor. And that's typically what we like to do. It's a trade-off, but paying a higher price for confirmation is one of the most important concepts in trading to increase your odds of profitability with your trade setups. So if you are considering a potential long-term position into Bitcoin, let's spell out the numbers and see what we're looking at here. Currently, the price is right around 70,000. So you'd be looking at a 70,000 area entry point, and you'd want to set a stop just below last month's low. That's really important because if the price breaks down below this low, below 60,000, we definitely don't want to be in the trade anymore because that means we've broken the long-term uptrend line, and we could actually break down below the 0.618 retracement in that case. So this is definitely our line in the sand. So it makes it nice and clean for risk management because you can set your stop, just below that low plus some wiggle room, maybe the 59,300 area around there. So if it doesn't work out, you're out immediately on a break of that level. All right. Now on the upside for a potential target, you do have some resistance right around the 84,000 mark. But if we're talking longer term, I mean, the first target could be a retest of the prior highs around 126,000. All right. So if you look at that as a potential target, then you're looking at about a 15% risk if you stop out for about a 78% potential profit target to the upside. And that works out to be about a 1 to 5 risk reward ratio, which is fantastic. In fact, you typically don't get setups like that very often. Most of the setups are 2 to 1 or 3 to 1. So is now a good time to buy Bitcoin for the long term? Well, based on what the chart is showing us, this is one of the stronger risk reward setups we've seen. And we're actually already positioned in Bitcoin right now in our own MTG crypto portfolio. And I break down setups like this regularly inside the MTG tribe, which is our free trading community. So if you want to see how I'm actually managing this trade on a shorter time frame, plus get trade breakdowns and trade ideas and connect with other traders who think the same way as us, then go ahead and join us. It's completely free. You don't need a credit card, and the link's in the description. Also, don't forget to check out that Fibonacci meetup video I mentioned. I'll link that below too, so you can really dig into how that tool works. And above all, remember to always trade what you see, not what you think.